Have you ever gotten one of those letters from the IRS that just makes your stomach drop? Yeah, you're not alone. Today, we are going to pull back the curtain on one of the most common and frankly confusing ones out there, the CP2000 notice. It looks terrifying, I know. But stick with me because by the end of this, you'll have a clear, step-by-step plan to handle it. Let's dive in.
And that feeling, that mix of panic and confusion, it is completely universal. I mean, this quote from a user on Reddit just nails it. You know something's wrong, but trying to figure out how to fix it with the IRS feels impossible. Well, that's exactly what we're here to do. Give you the map to get through that maze.
Okay, first things first, let's just get the biggest myth out of the way. A CP2000 is not a formal audit. Let me say that again. It is not an audit. It's an automated notice kicked out by a computer program. All it's doing is flagging a difference between what you reported and the data the IRS got from somewhere else. You can almost think of it as the IRS computer tapping you on the shoulder and saying, "Hey, I've got two different numbers here. Can you help me make sense of this?"
So, to get you from that initial panic to a final resolution, here's our game plan. First, we're going to break down the notice itself. Then, we'll walk through 3 super common and kind of tricky scenarios. After that, we'll get into the nitty-gritty of how to write your response, how to fight that penalty they almost always add on, and finally, what happens at the end of it all.
All right, let's jump into Section 1. Before you can even think about writing a response, you have to know what you're looking at. And the key to the whole thing is actually pretty simple. This all starts with a data mismatch. So this notice comes from a system called the Automated Underreporter, or AUR. And you got to understand, it's a powerful system, but it's also a bit of a blunt instrument. It's basically playing a giant game of match. It looks at your tax return and compares it to all the W-2s and 1099s filed with your Social Security number. If it finds income on a 1099 form that it can't find on your return, boom, it automatically spits out a CP2000 notice.
And this slide, wow, it lays it out perfectly. On the left, that's your universe, the tax return you carefully filed. On the right, that's the IRS's universe, this giant sea of data coming in from everyone you do business with. The CP2000 notice is born in the gap between these two columns. Your job is to be the human in the loop, to provide the context and the story that the computer is completely missing.
Okay, let's move on and see how this all plays out in the real world. We're going to look at 3 very common situations where this blunt instrument of a computer system tends to get things really wrong.
First up, one of the biggest ones we see, the zero-cost basis error. This is a nightmare for anyone who trades stocks or crypto. Your brokerage, right? They report the gross proceeds, the total amount you sold something for. But if you forgot to file the right form, or if the cost basis information wasn't included, the IRS computer makes a wild assumption. It assumes you got those stocks or that crypto for free, and it taxes you on the entire sale price as if it were 100% pure profit.
So how do you fix this mess? Well, you have to give the IRS the other side of the story, your cost basis. That means you need to send them a correctly filled out Form 8949. This is where you show what you bought it for, what you sold it for, and the actual gain or loss. That form then flows into a revised Schedule D. And the key, the absolute key, is you have to include proof, like your original trade confirmations, to back up your numbers.
Now, check out the language here. This is so important. In your response letter, you don't need to be emotional or defensive. You need to be direct and factual. Just state the facts. You say, look, your proposal is incorrect because it's using a zero-cost basis. Here are the correct forms and the proof that shows my actual gain. Simple, clear, and direct. All right, next scenario. Worker misclassification. This happens all the time. A company pays you as an independent contractor and gives you a 1099 NNC, but they treat you like a regular employee. The IRS computer sees that 1099 income, and it expects you to pay not just income tax, but the full whopping 15.3% self-employment tax. That can be a massive, unexpected bill. To fight this, you've got a 2-pronged attack. First, you can file a Form SS8. This basically asks the IRS to step in and make an official call on whether you're an employee or a contractor. Then, with your CP2000 response, you include Form 8919. This is the magic form that lets you calculate and pay only your half, the employee's share, of Social Security and Medicare taxes. It saves you a ton. And our third common scenario, gambling. Casinos have to send you and the IRS a Form W-2G for big wins. The IRS's computer sees that income, of course, but what does their system not see? Right, all your losses. The law says you can deduct your gambling losses up to the amount of your winnings,
but the computer only sees the income side of the equation and tries to tax you on the whole thing. The absolute key to fixing this is good documentation. You'll need to send in a revised Schedule A to itemize those losses, but you gotta prove them. The casino's win or loss statement is a good start, but the gold standard is what's called a contemporaneous log. And that's just a fancy term for a diary you kept all year, jotting down the date, the casino, and how much you won or lost each session.
All right, moving on to Section 3, you figured out what the notice says, you know what the error is, now it's time to actually build your response. This is your action plan.
The process is actually pretty straightforward. 1. Go through that notice with a fine-tooth comb and compare it to your records. 2. Gather up every single piece of paper that proves your case. The forms, the statements, the logs, everything. 3. Use the response form that came with the notice and check the box. Do you agree, partially agree, or totally disagree? And 4. Send it all in. And pay attention to that 30-day deadline. Using the fax number or the document upload tool listed on the notice is usually your best bet. It's fast and gives you a receipt.
Now, I need you to listen very carefully because this is maybe the single most important tip in this whole thing. Whatever you do, do not file a Form 1040X, an amended return, as your first response. This is a super common mistake and it creates a bureaucratic nightmare. Why? Because your CP2000 notice is being handled by one department. A 1040X goes to a completely different department. Filing both at the same time is like sending two separate letters about the same problem to two different government buildings. It just creates total confusion and massive delay.
Okay, so you sent your response, you corrected the tax, but you're probably not done. There's a very good chance the IRS also slapped a penalty on there. So let's talk about how to fight it.
The IRS will almost always automatically propose a 20% accuracy-related penalty right on top of whatever tax they think you owe. You can pretty much count on it. It's almost a default setting, but you do not have to just roll over and accept it.
You can ask for the penalty to be removed for something called reasonable cause. Now, this is a real legal standard, straight from the IRS's own playbook. It basically means you have to show them that you tried, in good faith, to get everything right. You acted like any normal, careful person would, but for some legitimate reason, you still messed up.
So what does that actually look like? Well, maybe a company sent you a 1099 that was just plain wrong, and you relied on it. Or maybe the tax rules were just incredibly complicated, like trying to track the basis on 100 different crypto trades. Or hey, maybe it was just an honest, one-time mistake in a year where you normally do everything right. These are all potentially great arguments for reasonable cause. And just like with your main response, you want to be direct. In a separate paragraph in your letter, you specifically ask for penalty abatement. Use the magic words, reasonable cause, and good faith. And you see that little citation to the Internal Revenue Code, Section 6664C? Throwing that in there shows them you've done your homework. And that brings us to the home stretch, our final section, resolution. You've put together this beautiful, well-documented response and sent it in, so what happens now? Well, it really goes down one of two paths. Best case scenario, the IRS agent reads your explanation, looks at your proof, and agrees with you. You'll get what's called a no-change letter in the mail, and the case is closed. Done. If, however, they reject your arguments, things get more serious. You'll get a letter called a statutory notice of deficiency. This is basically your official ticket to U.S. tax court, and the clock starts ticking. You have exactly 90 days to file a petition if you want to keep fighting.
So this all brings us to a really important final thought. This whole CP2000 process, it really shines a light on how much the IRS now relies on automated systems. It's efficient for them, for sure, but it completely lacks any human context or nuance. It can't understand your story. And it leaves us with a really big question. In this new age of algorithms running the show, is our single best defense just good, old-fashioned, meticulous record-keeping? I think the answer is a resounding yes. Thanks for tuning in.